Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, May 11th, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. And we are not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Well, it's been an interesting week in the market. Not much occurred in the first 3 days, as we saw there. And then what happened is on Thursday we had jobless claims, which gave us kind of a mixed bag, even though the market finally responded to the upside. And we had an up opening for really the first time during the week. On Friday morning, prior to the time you'll get this, you'll be able to trace and see what the PPI came out at, certainly capable of moving the market. And then at 9:55 we have a consumer sentiment, also capable of moving the market. So we've got certain economic announcements that are going to come out today that will definitely affect how the market will respond the rest of the day going into the weekend. With that in mind, let's take a look at the SPX. Taking a look at the SPX, we see that during the last 4 days we continued this down cycle that we've been having in the market, and you see that we very definitely carried down and broke into basically a new trading zone as we broke into this trading zone down here. Also notice that we closed almost every day within that old trading zone that went from this area up here to this level of support down here, and we're still hanging out in that trading zone. In fact, let's take a closer look. But as we can see, that it really ended up being a down cycle for the week. Let's take a closer look at the SPX, and there we are. We see that what we're looking at with the SPX, we continued with this down cycle. This was the area of the range that we've been trading in for quite some time. We actually traded during the day, intraday, below those levels, but closed up in the yellow zone. And again, it closed up above that level right there. And then finally, on Thursday, we ended up with a higher high and a higher low, showing us a change in cycle, giving us an indication that on Friday we could see a continuation of this, but we've got confirmation that this bottom may have been put in, and we have a little pivot there going from this down cycle changing to the up cycle. If that is the case and we get follow through tomorrow, we could see 4 or 5 days in the coming week where we come into new areas and work our way back up towards some of these higher levels that we've been at before. Trading in that same zone between there and there. All right, so with that in mind, let's go ahead and take a look and look at the Dow. And as we see, the Dow avoided its 7th consecutive day of losses after withstanding some late day selling, and still finished with a gain of almost 20 points for the Dow. Notice trading within that range, certainly broke through that 13,000 level this week, as it had a down cycle in this sideways trend and continues to do so. We've hit support. We got a higher high and a higher low, and if we get follow through tomorrow, we could see more of this going back, retracing, and working up towards higher areas of the range that the Dow currently is trading in. All right, so let's take a look at the NASDAQ and see that it actually broke out of its layer of support and broke down into a new area and still is in that area. So we will need some leadership out of the NASDAQ in order for the S&P to continue up. And we'll see if it does that. Notice again we got a higher high and a higher low on Thursday, but notice that we it ended up with a red candle. So it opened strong and then was not able to maintain that height throughout the day, as the Dow, or the NASDAQ rather, is below that magic 3,000 level. And we'll see if we get back up into this zone to continue up into this area up through there from 2950 to 3100. So let's see what the NASDAQ's going to do tomorrow and see if we get confirmation with another higher high and a higher low. Russell 2000 still trading within its trading zone, highlighted with the yellow, seeing a low there, and closing above that low, as we see here. Notice that the Russell also had this down cycle, and then really, instead of continuing down, kind of consolidated this week as it went sideways, as it already had a bigger move. Big tails on these days. That's Tuesday, that's Wednesday, and today a higher high and a higher low on the Russell 2000. And this also may give us an indication that we're headed higher Friday and carry through till next week. All right, the VIX, as we saw as the market was going down, the VIX, the fear index, was definitely going up. And as we saw today, we got a higher high and a higher low in the S&P and the other indexes. So therefore, we see that the VIX little fear index has come down a little bit and cycling down back into that zone where it spends most of its time. 85% of the time during the year, it's somewhere between 20 and down here at 14. So VIX back into its normal zone, and the volatility will generally decrease as the market goes up. All right, let's take a look at the bonds. The bond market, of course, traditionally will go opposite the way of the stock market and of the major indexes, and that's exactly what happened. Went outside of that previous zone that it was trading in, and now is back into that zone as today, well, with higher highs and higher lows, we're putting the bonds back into that area. Watch the bonds carefully. There could be some money made here in maybe one of the ETFs like TLT, as when we see the market pull back in late May, which it generally does, we may see this break up into new highs with the ETF, for instance, TLT, which is a bond ETF, carrying through and following through to higher highs during the summertime. Next, let's take a look at the financials, and we see that the financials followed the overall market, staying in that down cycle, giving us on Wednesday a perfect doji, actually, and a spinning top. And then we see that on Thursday we ended up with a higher high and a higher low, as the financials certainly could lead the market up, and we like to see the financials go the same way as our major indexes go. Next, we see that oil also followed, and it was in a down cycle. And today we got confirmation of a higher high, higher low, giving us a potential buy signal. See if we can follow through tomorrow, and you've certainly got a buy signal to trade within this kind of a zone for oil, as it will follow the overall markets and has been doing so as of late. So ETF for oil is USO. Crude oil dipped into negative territory early in the morning, but still managed to change up 9 cents for the day, as we see oil headed a little higher and giving us that classic buy signal with a higher high, higher low off of the pivot that took place on Wednesday. All right, next take a look at gold. Followed oil, followed the overall indexes, pulled back with the overall market, and again today gave us a higher high, higher low, not on great volume, but nonetheless, confirmation tomorrow, we could see gold rise up again and come back up into that previous zone that gold was trading in. Today, it posted a modest 0.1% gain in gold at $1,595 per ounce. The GLD is the spider, the ETF, where you can, instead of trading gold futures, you actually can go in and trade a stock. That will give you an indication of what's gold. So potential buy signal on gold. Notice we're getting a lot of buy signals after we got today. Higher highs and higher lows. Look for follow through tomorrow or on Friday as we see the market with news before the market opens, and watch your futures to see where we're going. All right, we see that looking at the spider, which gives us an idea of the volume. We were decreasing in a downward cycle. Broke actually below its previous trading range, and we see that it had kind of a spinning top with high volume, and then today again had the confirmation with higher high, higher low, which many might consider to be a buy signal on the spider. So we're showing potential buy signals throughout the market if you're a bull, and look for that follow through by following tomorrow morning that first half hour or first hour and seeing where the opening high and low are, and using that to help determine which side of the market to be on as we go into the 3-day weekend. Also check your economic announcements to see exactly what effect they have on the market. You can look at futures to get an indication of what kind of effect they're having on the market. Tonight, on Thursday night, futures were down about 8 shortly after the market closed, and we'll see where it is in the morning when the market is opening at 9:30 Eastern Time. So with that, we've got other stocks that we watch, and we're going to go ahead, for all of you that are gold members, we'll take a look at the charts on these stocks, talking about whether we got buy signals or what's going on with these stocks, as earnings season is pretty much over. Most of these companies have had earnings and the effect that it will have on these stocks, and looking for the market to pull up and give us maybe 4 or 5 days in a bullish run, looking for some swing trades on buy signals on these following stocks. So with that, if you're not a gold member and you would like to get involved and see some more free videos, you can go to www.optionsuniversity.com/free gold. For our gold members, hang in. We'll be right back in just a minute to continue on with our stocks to watch. This is for the Options University Butch Shorak, Friday, May 11th, 2012.